Are you an intraday trader who struggle a lot to identify the trend of an instrument? Suppose you are a swing trader or positional trader, but still you scratch your head to identify the trend of a stock. Don't worry friends, in this video I will share 4 simple but excellent and powerful techniques to identify a trend of an instrument. Two techniques are using price action and two techniques are using simple indicators. If you apply any one of these concepts, I guarantee that you will get 100% clarity in your mind about the direction of the instrument. So without wasting much time, let's start. There are many ways to identify a trend. Whether in intraday trading or positional trading or swing trading, we can use many techniques to identify a trend. So number one such technique is simple trend lines. See, for example, we can draw simple trend lines to identify a trend. Let's say I draw a trend line like this. Okay. See, for example, here to here, I draw a trend line like this. And at the same time, I will also draw a trend line like this. So what this indicates is in this period, okay, so in this period the market, the particular stock is in a sideways trend, right? So we can use simple trend lines to identify a trend. See, for example, we can also do like this. I will delete this, then I will go back. If I go back, for example, okay, so when you draw a trend line like this, I will draw like this using the lines itself. So when you draw a trend line like this, so what this indicates is in this zone, actually in this zone, this particular stock is in a downtrend. Okay, so we can draw trend lines to identify a trend, but many beginners will ask so many questions about drawing a trend line. See, it is very simple friends. Always remember a couple of rules while drawing a trend line. So try to connect minimum 2 to 3 swing highs or swing lows. Okay, so this connection of 2 to 3 peaks is very important to call it as a trend line. So you should not connect only one, or you should not connect only two peaks and draw a trend line. So if possible, try to connect more number of peaks, and it will become a powerful trend line. If you connect less number of peaks, it will not become a very powerful trend line. For example, when I draw a trend line like this, can you see, I joined one peak here, I joined one more peak here. Now if I draw properly, I will be able to connect one more peak here, one is here, one is here. So in this trend line itself, I have connected around 4-5 peaks, right? So this is how we can draw the trend line. For example, if I go back, see here also I connected one peak, two peak, and I've connected 3 peaks, right? Here also, if you look at the resistance, I've connected one peak here, one peak here. So I connected around 3 peaks. So you should try to connect, as many peaks as possible. See, if you draw a trend line like this, you will be able to connect 1 or 2, 3, 4 peaks, right? Okay, we'll do one thing. We'll go to some other stock. For example, I'll go to Bajaj Finance chart. If I go to Bajaj Finance chart, if I see, if I draw a trend line like this, I can start from here, I can draw it from here, I can connect like this, right? See, if you observe very carefully now, so I connected one peak here, right? I connected the second peak, I've connected the third peak here, fourth peak here, I've connected around fifth peak here. Later the price action is a little volatile because it went upside, it went downside, but this is a resistance trend line. This is a pretty decent, quite powerful trend line. So what we can do is, until the price breaks above this trend line, this resistance trend line decisively, we can expect sideways to downside move. So that's what happening, right? So it's acting as a strong resistance, right? See, every time the price came here, it facing a resistance and it is going down, right? See here also, this is a kind of a bearish engulfing. Whenever the price reaches this resistance level, there are good sellers are coming and they are pushing the price downside. So now if you notice very carefully here, we can also draw one more trend line. For example, if I zoom here, I can also draw one more trend line here, right? See, okay. So you can also draw a trend line like this. Even this is a valid trend line because I have connected 1, 2, 3, 4 and close to 5 peaks. Okay. So I can also draw a trend line like this. So in this mode, the price is in a sideways. In the long term, it is in a downtrend. In this mode, it is quite in sideways mode. But until price breaks above this level, so 7,400 is a crucial level. So until price breaks above this level, we can expect only sideways to downside move. So this is how one can draw a trend line to identify the strength of a trend actually. See, I will go to some other stock actually, so that we will get an experience. If I go to Titan, for example, Titan, if I select NSE, see once again I can draw a trend line like this. If I can draw a trend line like this, right? Connecting these 3-4 peaks, this becomes a valid resistance trend line. If I go back again, I can draw a trend line like this. Okay, I can draw a trend line like this, right? So it's like connecting 3 peaks actually, 3 or 4 peaks. So while drawing trend line, we can identify a trend. See friends, we can also apply this concept even in intraday trading or even in different types of trading. Suppose, let's say you are an investor, you look at only weekly charts. Still, you can draw trend lines. These are all applicable. For example, this is a weekly chart. See, in weekly chart, we can draw a proper trend line like this, right? See, here to here, if I connect like this. See, so the price broke out here. So until here, it was a valid resistance trend line, right? Can you see? See, I've connected how much? I've connected around 1 peak here, 2 peak here, 3 peak here, and a 4 peak here. So this is a quite powerful trend line. So this is one thing, and we can also draw a trend line like this. Here also I've connected around 2-3 peaks. So this clearly shows, the slope shows the price is in an uptrend, right? So this is one thing. And also note one more thing, friends. See, the slope of the trend line is very, very important. Please ensure you don't draw trend lines with more than 40-45 degree angle. So if you compare the trend line with an imaginary horizontal line, this angle should not exceed 40-45 degree. So if it stays less than 45 degree, it is the sign of an healthy trend. Because if the price goes up like this, it is not a sign of an healthy trend, because that indicates something else. But if the price goes smoothly like this within a less than 45 degree angle, so this indicates the sign of a proper healthy trend. Okay. So this is one thing, and using the trend lines, we can easily identify the trend of a particular stock. We can also do this even in a 50-minute chart. See, for example, this is a 50-minute intraday chart, and easily you can draw a trend line like this. Can you see here? You can draw a trend line like this. Similarly, you can draw a trend line like this. For example, this is not here. So you can also draw a trend line like this. For example, from here to here, you can draw a trend line, right? See, you are connected 1, 2, 3, 4 peaks, you are connected. So in intraday trading also, you can now draw a proper trend line. Next is the second best way to identify a trend is through Dow Theory. So many people ask me what is Dow Theory. See, Dow Theory is very very simple, friends. You take any instrument, whether it is a stock market, stock equity chart, or whether it is a futures chart, commodities chart or forex chart. See, price moves in a certain what do you call, certain pattern actually. So there are four important patterns actually. So the four important patterns according to Dow Theory. This is based on Dow Theory. Okay. So the first important pattern is price goes like this, making higher highs and higher low. For example, if you consider this as a low, consider this as a high. So compared to this low, this made an higher low, right? Similarly, compared to this high, this is a higher high, right? Correct. So again, this is an higher high compared to the previous low. This is an higher high compared to the previous high. Similarly, this is an higher low and this is an higher high. So in an uptrend, price keeps on making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Okay. In other words, if the price is making higher highs, higher lows, higher highs, higher lows, then we can consider this as the price is an uptrend. It is a simple way to identify a trend. If it is making higher high, higher low, then we can recognize it as uptrend actually. This is one very simple thing. And the second thing is price keeps on making lower highs, lower lows, lower highs, lower lows. Okay. So for example, if you consider this as a high and if you consider this as a low, compared to this high, this is a lower high, right? Similarly, compared to this low, this is a lower low. Again, this is a lower high and this is a lower low. So this is a lower low. We can keep on continue like this. But my point is very simple, friends. Whenever the price keeps on making lower highs, lower lows, lower high, lower lows, we can consider the price is in a strong downtrend actually. Okay. So it is in a strong downtrend. So if the price is making higher high, higher low, higher high, higher low means uptrend. If the price is making lower high, lower low, lower high, lower low means the price is in a strong downtrend. Okay. So the third one is sideways trend. So in sideways, what happens is it's very simple. Price keeps on making same high, same low, same high, same lows. Okay. So if the price keeps on making same highs and same lows, then we can consider it is in a sideways trend. Okay. So it's very simple. Whether you use a daily chart, whether you use a weekly chart, monthly chart, it doesn't matter. If the price is displaying this pattern, it is an uptrend. If the price is displaying this pattern, it is in downtrend. And if the price is displaying this pattern, it is in sideways trend. Now, the fourth one is, it is very volatile or very random. Whenever the, market is expecting for something, or whenever there is a, big event happening in the world, so price, it goes like, without any structure actually. Okay, this is called as random. Okay, it might go like this, it might fall like this, it might go immediately like this. So all these things will happen. Okay, so this is trend identification using Dow Theory. So what I do is I will go to some charts so that you will understand it in a better way. So now if I for example, you can take this. If you take this, see price from here to here, if you check here to here, price went like this, right? See, what it means is this is a low, this is a high. So compared to this low, this made an higher low, right? And this made an higher high. So until price keeps on making higher lows and higher highs, we can consider this is in an uptrend. Okay, until here, the price is an uptrend. But the caution is here the price made an lower high. Similarly, it made a lower low here. Okay, this is a two caution message. So until the price, if the price breaks this level decisively, then we can say this trend is over, uptrend is over. We can expect either sideways or downside move from here actually. Similarly, if you go to some other stock, for example, I will go to HDFC Bank. See here, it almost it made the same high, same low, same high. Almost all the highs are same, right? So it is in a sideways trend. As of now, it is in a sideways trend. But earlier, if you compare here from here to here, see it made higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, right? So it is in an uptrend actually. So we can use Dow theory like this to identify a strong uptrend or strong downtrend or sideways trend or even a random market. Okay, so these are the two techniques of trend identification using the price action. Now we will see two indicators to identify a trend. Okay, so the number one indicator according to me is RSI. So when you plot RSI on TradingView, we get different types of settings. I don't recommend these settings, or I'm not a fan of this setting. So what I do is I will remove the Bollinger Band, I will remove the lower Bollinger Band, I will remove the regular bullish, I will remove the regular bullish, bearish, I will remove everything. So I will middle band I will remove, I will upper band I will make it 60, lower band I will make it 40. RSI background is filled, okay. Bollinger Band no need, overbought, oversold no need, okay. So if I do all these things, and then what I do is instead of RSI, I will use RSI based MA. I will also, first I will explain why I use RSI based MA, then I will get into the MA part. MA I prefer to use it 5. See here what happens here is, okay. So according to me, anything above RSI 60 is bullish, okay, and similarly anything RSI below 40 is bearish. Okay. So we can see it on many charts. We can visit different stocks so that you will understand this concept. See here, for example, friends, from here to here, RSI is above 60, right? Can you see what happened here? RSI, the price went upside, right? It is in a strong uptrend. So until RSI stays above 60, we can consider as, uptrend. Anything RSI below 40 is downtrend. RSI between 40 and 60, it is in sideways trend. You can see from here to here, RSI stayed between 40 to 60. See here, the price went sideways actually. See here also, see it is a proper sideways move here, right? See, if you see here, it is a proper, you can draw a trend line, or you can draw, you can check with naked eye. The price is in a clear sideways trend here. See here, price RSI stayed, in between 40 and 60. So whether you use price action, whether you use indicator, everything combines actually. So now, if you go little away, see here again, the price is in a sideways trend. You can see RSI stayed between 40 and 60. Again, from here, the price break out from the resistance zone and it started moving up, taking a support at this level. See, from here, RSI started moving above 60. We can go to some other chart. For example, if I go to Tata Motors chart. See here, the price stayed proper sideways, right? You can see here the RSI stayed between 40 and 60. From here the breakout happened and the price went upside. From here RSI moved above 60, right? Now why I use RSI moving average instead of RSI MA is, let's say theory is different, practical is different. Based on this logic, RSI above 60 is bullish, you decide to take a long trade. RSI below 40, you decide to take a short trade. See here what happened is, price RSI went little below 40 and then moved up, right? See, when you use RSI straight away, it generates a lot of false signals. We cannot say false signal, it is like a temporary fall signals. So if your plan is to take a short trade whenever the RSI reached 40, you would have taken a trade, it would have taken your stop loss. You would have taken a trade here, it would have been taken a stop loss. You would have taken a trade here, it would have been a stop loss, right? Same way it works on the upper side also, above 60. For example, many times it goes little above 60 and it comes back. You can see here, right? It happened the same thing, it happened right here also it went little above 60, come back, here also it came 60, here also, right? So instead of using RSI as it is, if you use RSI MA, okay, we can easily avoid this false techniques. For example, see, you can also see the yellow is not the yellow line is not below the RSI 40, right? I will change the color so that you will understand in a better way. For example, for moving average, instead of yellow, I will make it black. I will increase the thickness. You can see RSI MA didn't generate the fall signal, right? See, but it gives a proper breakout signals. Whenever it breaks above 60, there is a high probability of price going upside. It basically it avoids a lot of fall signals. It avoided a fall signal here, right? It has avoided a fall signal here as well. But whenever you use moving average, there will always be a little delay. Okay, so you can vary the moving average based on to adjust the delay. For example, you can as of now moving average length is 5, you can reduce it to 3 to reduce the delay. Okay, you can work like that. See, it reduced the delay, but still that the fall signals we were able to avoid even after using 3-period moving average. So my suggestion is, instead of using RSI as it is, you can use RSI MA with 3 or 5, and it works beautifully well. Anything above 60 is bullish, uptrend. Anything below 40 is downtrend, that is bearish. Anything between 40 and 60 is sideways trend. Okay, this is the third way to identify a trend. So the fourth way to identify a trend is through one more indicator, which is called as ADX, Average Directional Index. This is not the indicator. ADX with plus DI and minus DI line is the indicator. So if you search ADX, you can see ADX and DI. You can use this indicator. So this has a plus and plus DI and minus DI line. See, basically, you can change the settings here. What we can do is this basically what we say is ADX line, anything above 20 is a strong trend. If it is more than 25, it is a very, very strong trend. Even 20 is also decent. So what we are doing is see here the price is in a sideways trend, right? It is not a strong trend actually. See here, if you look at the ADX line, it stayed below 40 for most of the period, right? So this indicates it is a weak trend. Okay, so this is one thing. I will make this ADX line little thicker so that you will understand in a better way. Little thicker. Okay, I think now it is clear. ADX line is level is this one. Level is fine. This is the line. Okay, so now the logic is very simple. Whenever the ADX line is above 20 and this plus DI means green color line, minus DI means red color. If the plus DI line is above minus DI line, or the green color line is above red color line, and if the ADX line is also above 20, that indicates a strong uptrend actually. See here, that crossover happened here itself, but the real trend started when the ADX broke above 20. See, this is the breakout actually. See, you can draw a trend. Once again, I'm trying to combine the trend line concept, right? This is a powerful trend line. I'm connected close to 1 or 2, 3, 4, 5 peaks. The breakout happened. You can also draw a trend line like this. There is one more trend line. See, the breakout happened here, right? It happened here, but with the ADX indicator, there is a slight delay. the crossover happened little early, but ADX line came above 20 in this particular candle. Okay, so whenever the ADX line is above 20, when the plus DI line is above minus DI line, we can consider it as a uptrend. Similarly, when the ADX line is above 20 but the red color line is above green color line, we can consider it as a downtrend. See here, for example, from here itself it is started. Okay, the ADX line went above 20 here. See, there is a breakdown here, right? So this is a trend line. We can draw a trend line like this. The breakdown happened here, and the crossover happened little early itself, but the ADX line went above 20 here actually. So now you can also use the same concept even in daily charts. See, for example here. See, for example here, you can draw a trend line like this, right? You can draw a trend line like this. Correct, right? I've connected 1, 2, 3, 4 peaks approximately. There is a clear-cut breakout. See here, the crossover happened little early, and the ADX line went about 20 little early itself. In this case, ADX indicator were able to give the signal little early itself. Okay, so from here the uptrend started, and here also ADX line stayed about 20. Similarly, for a downtrend, it should be on the downside. Red color line should be above. So I will take a chart which is in a downtrend so that you will understand it in a better way, because it looks like Tata Motors is in a strong uptrend for many days. But there is one more example here. See here, you can draw a trend line like this, and price broke down here, right? It broke the trend line here. See, at the same time, I mean, before only the crossover happened somewhere here, but ADX line went above little 20 in this particular candle. So from here, ADX line indicating it is in a it's not the downtrend started. So the same concept you can use in intraday trading as well. So there are 4 simple ways to identify a trend. Whether you are an intraday trader, swing trader, positional trader, investor, you can use 4 methods. One is trend lines. By drawing a simple trend lines, you can identify a trend. Second one is Dow Theory. Using lower high, higher high concept, you can identify a trend. Third one is RSI. RSI above 60 is bullish, below 40 is bearish, between 40 to 60 is sideways trend. And ADX above 20, the concept plus DI minus DI line, you can identify a trend in any instrument. I hope this video is really helpful, friends. If yes, please like the content and share with your friends. Thank you. See you in the next video. Bye.